All right, friends, we are back, and now I have Miss Lisa with me. So here we go. Let's rock it. We are so excited to come to you guys this evening. Miss Beth asked us to do a couple little, I guess you could say, a series over the importance of life insurance because it's Life Insurance Awareness Month. So this evening, we're not going to take up a lot of your time, about 15 minutes, and we're just going to cover a very important topic, and it's the difference of understanding whole life versus term life, and we're just going to bounce back and forth off of each other and give you some expert knowledge. And if you have any questions afterwards, we would be happy to answer that for you. You can put it in the comments. You can message either one of us directly, whatever makes you comfortable. We're here just to help you and educate you on life insurance for the next couple weeks. So go for it, Ms. Lisa, if you want to take it away.
Well, good evening. Good evening. Hello, everyone of Georgia Christian Business Network. How are you all doing this evening? I am so excited to be here because I am so excited about life insurance. I'm going to tell y'all right now, life insurance is my jam. It's my purpose. It's my passion. It's my ministry. Okay. I have a very serious testimony about it for myself, but I'm not going to bore y'all with that tonight. But what I do want to take this time is, like Kylie said, it's Life Insurance Awareness Month, September, every single year. So this is the time set aside for us as life insurance professionals to educate you all that life insurance is so very important, and all the different types of life insurance, all the benefits of life insurance. And then not only that, it's a good time to review what you already have. Because a lot of people got life insurance. I think the statistics, Kylie, is what, 60% of Americans have it, about 40 do not.
Yeah. Prior to COVID, it was about 50, about 50, 50.
Yeah.
After COVID, it's kind of been an increase, but that is about right.
Yeah. So it's some work to do. So it's people out there that don't have it, and then there's people that do have it. But a lot of people that do have life insurance, a lot of times they don't have the correct type. Okay. They don't understand what type they do have until it's too late. Okay. So tonight we're going to talk about just two of them because, like Callie said, we're going to go live in this group a couple of days this week, and then now next 3 days next week. So if y'all don't catch this, catch it on the replay and go ahead and hit hashtag replay when you come through. Now let us know you came through, and catch the replays and look for us next week for some more information. But tonight we're going to talk about term and whole. Okay. So let's first off just give them a definition. And I give you my definition, and then Callie, I'll let you give your definition because there's so many different definitions. People see it differently. Yep. So for me, a term policy. Now, term for me, an easy way to remember it is temporary. T&T, term, temporary. That means it is a temporary fix. Okay, y'all know how you can put a Band-Aid over a sore and it's going to temporarily, fix it. And then if it's a big sore, right, you're going to have to go get stitches. So that's more permanent. That makes sense? The term is temporary, okay? So it's only going to cover you or your family or your loved ones temporarily for a certain amount of time, okay? Now, you may have seen term policies as a 10-year term, 10 years, 20 years, 30 years. I ain't never seen any over 30, but they could be out there.
I'll say I've only seen 30.
30 years, okay? So when you're thinking about a term policy, most people will get a term policy because it's less expensive, okay? I'm just going to be transparent and honest with y'all. Term policies is less expensive, which a lot of times that's all people can afford in their budget at the time. And that's good. If that's all you can afford, at least you know you got something. But you want to also understand, though, it's temporary. So after that 10 years is up, after that 20 years is up, after that 30 years is up, your insurance is up. You're no longer covered. It's gone. Bye-bye.
Yep.
Of course, the insurance companies are going to send you this nice little letter and let you know that this insurance is getting ready to end, honey. And if you want to keep it, what's going to happen, Callie?
The price is going to increase, and significantly. I'll give you just a testimony real quick because I'm doing this with my mom and dad right now. My mom and dad pay $25 for my mom's policy and $40 for my dad's. they're now in their 50s and their term is coming to their expiration. It's coming to the end of the policy, and they quoted them $175
What? A month?
for my mom that was paying 25. So
oh my God.
that's what I'd say. My definition of term would be exactly that. It's temporary. It's something that's going to help you in the moment. When I'm working with different clients, I explain to them that this is going to get you a lot of coverage too. So a lot of the times you're young and you have a lot of debt. And so you want to make sure that you have that coverage that covers your debt in case something happens to you. And this is an affordable way to do it. But if you have an agent, just like Miss Lisa mentioned a second ago, it's always important to review. With those term policies, your agent should be, and I said this the other day when I was on here with Miss Beth, that your agent should be getting with you every single year and just checking in to say, hey, okay, we put this term policy in. Remember, it was temporary. Where are you at now? Can you afford to convert this to a whole life? So that way you get to keep it for the rest of your life, which that's my definition of whole. I kind of jumped ahead.
That's fine. And talk to them about the conversion. Now, what is the conversion period? Is there a certain period of time that they have to convert that term to a whole?
Absolutely.
Or can they convert anytime?
And here's the kicker with that. It depends on your policy, which is why you need to be talking to your agent. Going back to my mom and dad, because it's the forefront and what I'm working on, my dad's policies, his convertibility period was until 2013. Now we are in 2023, based on the policy, because of his health at the time when they took it out, we can't convert it with that particular company, which means we have to now do underwriting again, and his health and medications have changed, and to, of course, do it off of his age that he is now. My mom's policy has convertibility up till age 72, but because of the amount of coverage she has, it kind of throws it into a different loop. So you just want to make sure you are working with your agent. I know when we do policies for families, it's like you get your policy packet. I have the coverage now. I throw it in the drawer. I'm on my way about it. But you really need to talk to your agent once a year. And if your agent isn't calling you, you need to be calling them, because the other thing that happens is some people get out of the industry. Some people, your agent may pass away. That happened. That's what happened with my parents' policy. He had passed on and no one was there to keep him updated on it. And so you want to make sure you know what's happening with that policy all the time, especially if you do term. So if you have to have term, you have to do temporary, you really have to stay on top of being aware, because when that policy comes to its expiration date, they're going to give you that premium increase like Miss Lisa and I just talked about. And it's not locked in for another 20 years. Typically, when you get the premium increase, it goes up that year and then the next year. And because I've had that happen with clients before too, they give them a 10-year time frame of, you may be paying $150 now, but 3 years from now, you're paying $225.
Right.
So term is great.
Right.
I'm against term.
Right.
Term is great, but it's great for your specific situation in the moment. But you always want to keep in mind that you need to look at converting it eventually. Don't go for it. There's a lot, and you see a lot if you're on social media, and obviously you are because you're right here with us in this group. You see it all the time. They say, oh, term is a scam. Term is not a scam. Term will pay for your expenses, but you have to understand your policy to understand that it's not a scam. It is a great product.
Right. Right. You just got to know what you're getting.
Yep.
Know what you're getting. And that's the reason why every year you need a review. And if you want to take the month of September, it's a good month to say, let me review my policies. Let me see what I got. Now, let's go into whole.
Absolutely.
Whole life, for me, I think of it as permanent, as forever, as never ending. Okay. A whole life policy, soon as you get that policy in place, you have a premium that you have to pay. Now, listen, y'all, and this is what I run into a lot. I don't know about you, Callie. People don't want to pay a monthly premium. It's like insurance is insurance. It's like car insurance. You pay a monthly premium. Okay. It's like your house insurance. Well, house insurance, you might not pay a monthly premium. It might be rolled into your mortgage, but you still paying a annual or monthly premium. Okay. Life insurance is the same thing. Give it the same importance. You have to pay it monthly. But the good thing about whole life is once you get that whole life in place, you have a premium. Most times, 9 times out of 10, that premium will not change.
Exactly.
It's supposed to stay that same thing for the rest of your life. Now, some of the policy companies I work for, it's up to 121, depending on when you get the policy. Now, if you get the policy in your 50s and 60s, it might not go up to 121. Right. It might just stop at 90, 900, I don't know. But it's until you die. Right. Until you die. Whereas term is temporary. Whole life is permanent. Now, let me just tell you, back to the price again. It's going to be a little bit more expensive. Okay? Quality is going to cost you more, people. Okay? We pay more for quality. We pay more for the best product. We'll pay more for what? Let's just compare Target to Walmart. Yeah, no. Some of us like Walmart, but then some of us like some bougie folks be like, I'm going to Target. Yeah. Now, Target may be higher. Y'all know they higher on the shelf, but we're going to pay that extra because it's quality, it's customer service. It's going to, you're going to get a better product. You're going to get, whatever. It's just better. Another example, Chick-fil-A. Chick-fil-A. Everybody loves Chick-fil-A. But we went, and it's $10 for a meal up in there now.
Instead of $4 at McDonald's.
Yeah. Instead it used to be $4 or $5 for a meal. Now it's almost 10, honey. But guess what? The line's still wrapped around the building. Mm-hmm. They pay more for quality. Okay. A whole life policy is your quality premium product. Guess why? It's going to be there for you forever. And another benefit is one that I love is the cash value, baby. You getting something out of it. It's appreciating. It's something that you're going to be able to pull something from if you need to, right? So, of course, you're going to pay a little bit more for it, but you have to weigh the consequences. If you want more, pay more now, or you're going to pay more later. Yeah. And later, it's going to be much, much more. You agree, Callie?
Absolutely. And that's what I wanted to piggyback off of Miss Lisa. And so what happens is a lot of these people get these term policies and then their term comes to an end and they want that whole life. And now you're looking at $300 or $400 a month. Whereas had you taken it 20 years ago at 115 or 120 and locked in that price, then the next thing that happens is they have to lower their death benefit. So they don't get as much of a death benefit for their family. Right. They're not getting that cash value. And some people, what they can afford is more like what we would call final expense. Mm-hmm. And a final expense only goes, some of them, the maximum you can usually get is $50,000. Yeah. And you still are going to be paying like $150 for the maximum amount because it's based off your age and your health. That's and so right now is the cheapest you're going to be able to get it. That's what I tell my clients all the time. This is the youngest you're going to be, and likely it's probably the best health you're going to be in. Mm-hmm. And so this is the best rate you're going to get either way you go. But the whole life has so many benefits because you can lock it in. You can keep those rates until you die. You do get that cash value. So not only can you use it for the fact of if cancer comes about, you have a stroke, you have a heart attack, but you can take that cash value and use it because you got laid off your job and you're not ready for retirement yet. And you need something to get you through for a couple months. Mm-hmm. You can use the cash value for anything you want. They don't ask you what you're using it for. It's there. So Whole Life has a lot of really great benefits in it. Like Miss Lisa said, you do pay for what you get. It's like the Mercedes versus the Toyota. Like you're going to pay for what you get, but it's going to go with you for life. You don't have to worry about what's going to happen when it expires. How am I going to handle, the premium then, and going through underwriting. You get that really good rate because of your health at the time. And you can get lots of coverage for a good amount, for a good price when you really start to look and compare it. So that's what, Whole Life is. And both of them are great. It depends on your situation, depends on where you're at in life, and it depends on how much coverage you need and what you can afford. But always remember with that term, if you get it, You have to make sure you're on top of what's going on with it. And
Right.
people, I even have clients, Miss Lisa, and you probably do too. I'll have a client that'll take out a smaller whole life policy,
Mm-hmm.
but then we pair it with the term policy too.
Mm-hmm. Oh
And
yeah. Ain't
yeah,
nothing wrong with having 2 or 3 policies too. Because
yes,
a lot of times I tell my people, my clients, listen, if you got a mortgage on your home, you need a term policy for your mortgage. Okay. Say your mortgage $500,000. Get you a $500,000 term policy, enough to cover that mortgage in case anything happened to you. Use that just for that. And then once the mortgage is done, then that policy is done, then you good. Then get you another policy for your life, for your children. Children, listen, y'all. I don't know if y'all ever heard of the $1 million baby, but if you have babies in your family, you got grandchildren in your family, give them a life insurance policy. I don't know if y'all have seen the Gerber baby. The Gerber baby is still out there. Okay. It's an improved. It's a whole life policy. You give them that policy now, start them on it now. When they 18, 20, 21 years old, they'll have a nice chunk of money in that policy, cash value, that they can pull out, they can borrow against for college, to start businesses, for a new car, whatever, down payment on a home.
Yeah,
Honey.
that's a good. Someone asked that question. What do you recommend for kids? Whole life, all the way.
Yeah.
Because of the fact that another thing too with the whole life, if you insure your kids, and this is to me massive, kids get sick just like adults get sick. Kids get cancer. Kids have all kinds, heart conditions. Those things happen. And if you insure your children while they're young and healthy, they keep that policy. It's super affordable. Super, super affordable, like almost pennies. Like, whoa, when I looked at prices on whole life for kids, I'm like, oh my gosh, that's so affordable, so much more than what I thought it would be. But if they have something that comes up in their childhood, they have that policy, and now they have what you call guaranteed insurability. And so as an adult, they continue to keep that policy. Whereas had you not insured them, they turned 18, they were sick when they were 10, that's on their medical record, and they may not be able to get coverage because of that condition they had when they were a kid.
Absolutely true.
But that's a very good question. It doesn't tell us your name on here on this StreamYard. So.
That's Rose Jean. Thank you for that. Thank you for that question. I'm checking on my
great question, Rose. Very good question.
Yes, honey. I was gonna tell y'all, if you want to do a whole life, at least do a whole life for your children. It's gonna be cheap.
Yes, absolutely.
Best advice ever. So yeah, we've been on here about 18 minutes. So that's pretty much the gist of term life and whole life. Absolutely. Is there any more questions out there before we wrap up? I thought this was very good, Callie.
Me too.
Like I said, and another thing, let me just throw this in here while we're waiting to see if there are any more questions. Term policies. If you work for a corporate organization, you work outside the home, that may offer a benefits package like your health, your dental, and they may throw some life insurance in there. So you think you covered. Okay, let me just give you a little tip on that.
Yeah.
It is a term policy. Okay, it's a temporary policy. Okay, because these corporations don't know if you're going to stay there forever. They don't know that. So why would they get you a whole life policy? No, there is a term policy inside of a group benefit package, so they get it very cheap for you. It's a benefit. So listen, even if you do have that at work, get that if you want to, that's fine, but you still need a separate policy outside of your job.
I always tell people, if you ever plan on leaving your job, you need your own policy. And when I say plan on leaving it, I'm not saying you're going to quit, but you are going to retire one day, and you need your own policy. Because if you wait until retirement age to try to get a policy private outside of your job, you're not going to be very happy at the prices you're going to have to pay.
Going to be very high again.
Yep.
Very high again.
If you're covered, that's great. Same thing like Miss Lisa said, I always say it. If you're covered, that's wonderful. Take it. Pay the $3 and get that extra coverage. But remember, when you leave that, you do not get to take it with you. And if they do try to, some of them will say, oh, you can, do the supplement, you can purchase it. But it's going to be more expensive than what it
Yeah.
would be if you were to work with someone that was an agent that's outside of the company.
That's correct.
Can you insure non-blood or blood relatives? If you're going to insure someone that's not that are non-blood or even relatives, depending on the circumstances, if you're a grandparent, you can insure your grandkids. You don't always have to have a signature from the parent. With people, when you're actually doing adults, though, if you're legal age, you do have to have both signatures. So for the person you're insuring as well as yourself. So yes, you can purchase one, but you have to have signatures and approval for the person that you're purchasing it on.
Yeah, and lots of times though too, they got to have some kind of relation though. Like
Yes.
if they're not, like if it's maybe a court appointed person, a court appointed what they call those people that they appoint people to take care of someone else.
Like a guardian.
A guardianship, yeah. You have to have that type of relationship and probably want to see the documentation for that as well. They just, insurance companies just don't go out insuring people that you not have some kind of connection to. You got to have a connection to them. You can't insure your neighbor because they done pissed you off and now you better get an insurance policy and do something.
Yeah. Yeah, but if you have like a blended family, we're a blended family. We have, we have 5 kiddos. So if you have a blended family and you want to insure your step kids, your bonus kids, then you can always do that. If you we're raising a niece or a nephew, just like Miss Lisa said, there's certain stipulations. There has to be godchildren. Again, that would likely have to be the parent would have to sign off on that. But typically on the policies, when you're doing that, they're going to ask you what's the relation, and then you give an explanation as to why you're wanting to insure this particular person. Good question. Really good question.
That is a good question.
So we're going to wrap it up for you guys tonight, unless there's any more. We want to give you all our information. I know Miss Lisa you're licensed in Georgia, correct?
I am in Georgia.
I am all over the place. So it doesn't matter what state you're in. So if you need some Georgia, if you're from Georgia, then get with Miss Lisa. If you are in any other state, give me you can message me on Facebook. You can message Miss Lisa on Facebook. We'll also put our contact. I know that we will put our contact information too. So if you have any other questions, if you get this on the replay, we can't answer that question right in the moment. You can, of course, comment on there and we'll answer back, or you can send us direct messages and we'll help you out with it. And we look forward to seeing you tomorrow. Tomorrow at where I'm in Central Standard Time. So tomorrow at noon for me and 1 o'clock for Miss Lisa. So 1 o'clock Eastern and then 12 o'clock Central. We'll be back on here and bringing you some more education and tips on life insurance, because it's the best month of the year, life insurance awareness.
Absolutely. So thank you all for joining us live. Thank you, Miss Rose, for all those wonderful questions and comments. And looking forward to seeing you all tomorrow.
Yes. Have a good evening.
Good night.